Right. So good morning again, guys. Welcome. I hear from Tajay. Janai, what's up? Everything cool? You ready?
Y- Yes, man.
Okay, Kim, you ready? Let's go. You up? Can you hear me? Unmute your mic. All right.
Yes, I'm ready. I'm hearing you clearly.
All right, let's get the show on the road. So today, the lesson is going to be about, here it is, risk management we're going to be doing today. And very important part of the lesson. Very super important a part of the lesson. Now, risk management is one of the key components of trading Forex. Key. So we're going to be going through the risk management lesson today. I'm going to touch on it. See how far time really permits us to do that today. And we're going to be looking at risk to reward ratio, how to enter a good or bad trade, and your take profit areas and stop loss. Very important lesson to be touching base on. So let's go. So we did touch base. I pull up this chart just now and I'm going through it. And I was looking at some setups, some areas right here. This is Great British Pound versus USD. And what we're going to be looking through the chart and identify areas if you wanted to do a buy in the market, if you wanted to do a sell in the market. You need to know how you find your entry points in the market, your stop loss, and your take profit. Right? No, this is the lesson where I need you guys to unmute your mic. I don't need
Correct.
I don't need you to mute your mic.
Yes, sir.
Everybody unmute your mic, right? Very important. Unmute your mic. Just ensure that your background is quiet. Just unmute your mic, right? Need to know that you guys are with me on this one, okay? All right, now let's continue. Now, risk to reward ratio, right? You need to figure out, let me say one more time, entry points, the stop loss, and take profit, right? So let's look at this chart, for example. We're going to go through the charts and I'm going to pick out a few areas and we're going to start. Now, remember that we went through the market and we were talking about contracts, expand, and
Was in a trend.
Good.
all you guys supposed to be there with me now.
Correct.
So what we're doing now, we identifying how we're actually going to go into a trade. How we're going to go into a trade and the reason why we're going to a trade. I identify entry points right through the candle. How we're going to do that, you know? So I'm just going to pick out a few areas. So you see like these areas here, that is consolidation right here. This is where you're going to stay out of the market. These areas here.
Yes, sir.
Very important. These areas are like consolidation, staying out of the market. You watch the market and then boom, right here,
Expands.
expands and going into a trend.
Going into a trend. Yeah, upward trend.
Expand, go into a trend. All this right here is going into a trend.
Mm-hmm.
How to identify now, how we're going to identify the areas. And I'm doing this on a 4-hour time frame. And do remember that we do everything on a 1-hour time frame. We do analysis on an hour time frame. But I'm just doing this right now as an example to show you guys. So I did a few of these as well to show you. Now, we're looking for something called a breakout. What we're looking for?
Breakout.
Breakout.
Right. So we're looking for when the market breaks out and goes into a trend. Now, what we're looking for is our entry, stop loss, and take profit. So right there, let's use right here as an example right now. So we're in the market right now. We see the market did something like this right here, and it came up, it contracts, expand, and then it retests, and then it goes into a trend. So realize that the market is on an uptrend right here. You'll see all this. It's more green than red. Okay, right here as well. So where would we really take profit? So if we're going to go with a trend, and we see this taking place right here, we start to look for the doubles, the jigsaws, right? You're going to see right here. See, this is a perfect example right here. So right here, I'm going to do a buy, and here I'm going to do a sell. So let's label it.
Come over here, so I can some more time. Oh, sorry.
Just pay attention, guys, because Sunday is going to be class right there. And I would love to spend some more time with you guys, but you know it goes. Next batch going to start, so I need you guys to really absorb the information, eat the information, have it. So we're going to go in the market right here for a sell trade. And I want to put it there as a sell trade. So you're going to sell this trade, right? Watch this now. You're going to sell this trade right here. All this right here, okay? Going down. So you identify the market. You saw that it went up here. Here's an next entry point as well. So I'm going to put it right here. Right, this area right here. So I'm going to play out two cards right here. And we're going to do one right up here. Two things I'm going to do right here. I'm going to do two different trades right here. So this here is a sell trade.
Sell trade.
And this one,
and the one down here is a buy trade.
All right, watch this now. Put this up right here, all the way. I'm gonna do a buy trade. So this is all taking away all the fluff. And I don't want you guys to have this idea what the purpose of a stop loss is to stop you from doing a bad trade, okay? Write this down. The purpose of a stop loss is to protect your account. Okay?
A stop loss or a stock loss?
A stop loss. Stop loss. The reason for a stop loss is not to protect you from a bad trade, but to protect your account. A lot of traders get these things mixed up. Okay? To protect your account. Who's?
Yes, sir.
So right here is going to be a buy trade, and the market is going in a what state now? If it's going to buy, what's happening here? What's happening right here?
It's going in a bullish trend.
You made me guys feel so proud. Good, correct. So the market is going into a bullish state right here. I'm going to zoom up a bit. So this is why it's happening right here. Same thing, guys. I'm just going to bring it down a bit. Good. So right here is a perfect setup. So it's going to go for a buy right here. So we started right here. We saw that the market expands, it contracts, and then it what? Go into a trend. So this candle right here, what it did was a tweezer, heading on up, and then it what? Confirms, and then it went all the way up into a trend. Now, so you predict that the market is going into a trend of up right there. So you may want to put your entry right here. So you saw that you can jump into the market somewhere here.
Good.
Okay. Very important. I'm going to change this color of this line. I'm going to put it, say, purple. And we're going to call this line right here entry. Pay attention. Entry. So right here is where you're going to enter the trade, right here. Entry is going to be here. I'm going to change this color too. I'm going to put that color purple as well. I want everything to be color coded. So right here is going to be entry. Okay. Now watch this. And I want this line to be a bit smaller. This line is too thick. I'm going to change this line. I'm going to put it a little bit more finer. Maybe put about this line. Okay. All right. I can work with this. So the entry are going to be somewhere about here. And let's be more specific. I'm just going to highlight the area. So I want you guys to get this. Reader wants you to get this. So we're going to highlight the area right here. So right in here, this is where your entry going to be at. Okay. Now, watch what happened at this point in time. Very important. That's the entry right there. Okay. All right. So you go your entry, you saw what happens. It indicates, it confirms, and then, you know, it's going to go into a trend up, and we're going to go for a buy. Okay. So this right here is going to be a buy trade. Now, how do you figure out is your stop loss and take profit? Very important. Now, this is where the risk to reward ratio comes in. Okay. Now, in the market, it is not a one-way stream. The market can go either way. It can go up, down, sideways, right? Three ways, up, down, sideways, right? So we need to figure out right here, if you're going to take a buy trade, what if the trade goes against me? Always put that in your brain, write that down. What if the trade go against me? Very important. So if the trade go against you and this is not going to be a buy, the candle reverse and goes down here, what happened then? So we need to mitigate that. And this is why you're going to put in the stop loss, right? So your stop loss would be somewhere down here.
Yes.
So let's change it now. So let's change this right here to a red, and let's change the line to a thicker line, to a real thick line. All right, so this right here, my friend, will be a stop loss. Now, how we're going to figure this part of the equation out now? So we're going to measure the risk to reward, right? So the risk to reward is right here. And if the candle goes against me versus my take profit. So I'm going to bring this up right here. So I don't want your stop loss to be under the candle like here. You need to give the stop loss space. So what you want to do is use this crosshair here, click right here, pull it down. That's about what? 42, 436, 431, 417, 44. So it's about 44 pips. Going down a little bit down more. Okay. So what we want to do is that we want to actually look at the risk reward. So we can move this. And this is how you're going to identify this, guys. It could be there. So we're talking about this entry right here. And I'm going to zoom in some more. This is the arrow we're talking about right here. Okay. Now, and this is the entry. Put this right here. This is entry right here. Right here. So what we're going to do is figure out how much can we go in the opposite direction. So if here if between here to down here is 46, 48,
Pips.
what we gotta do is do the same in reverse or opposite. So we're gonna figure out if this is how much that I'm risking, is this a good take right here, 28, or all the way up here? So you look at here, look for example, you measure from here all the way up to here. You see that's what? That's 144. See that?
Yeah.
So what you can do is you don't want the trade to stamp you out. And that is called a rally back to retail traders. Okay? Now, I'm gonna get to that in a minute. Now, right here, your take profit can be here. So this will be green now. So that will be 1 here take profit. So it goes up, take profit 1. You can have take profit 2 here. You can have take profit 3 here. You could have take profit 4. That's what I'm saying. You could have take profit 5. You can have as much as take profit as you want, as long as it continue in the trend that you predict it will. See what I'm saying? So all this right here is your take profit. From here to here. All this, guys, is take profit areas. All these right here are take profit areas. And if you don't want to use that word, you can use this word. Most time they use this word in Forex. Zones. All these can be your take profit area zones or your take profit zones right here. And that's because we're doing a buy trend right here. You see what I'm saying?
Yes, sir.
Risk reward, you see the risk and you see the reward. So your reward must be greater. Got it?
Yes, sir.
Emphasize that much right now, as much as I can. But that's how you would run that, okay? Now, let's go on a reverse. Let's say, let's remove all this off of the chart right now. Let's just delete all this good stuff right here. And this will be recorded, guys, and uploaded back to our Facebook and our YouTube channel so you guys can watch this later on. So we identify the areas. So we're looking for now is a sell. So you see the market going nicely, and you could use over here as an example if you don't want to use here. Okay, this is where right now you have a lot of persons, retailers, hedge funds, banks, they all come into the market, and that's why you find all these big candles in the market. Okay, now it comes off, you realize that the market is slowing down, and you see the retest come in, right? You see the retest come in, and you see it didn't confirm, but you see comes back here again, and this is saying, okay, I'm gonna wait and see what's gonna happen in the market. So waiting to see what happens. Okay. Now the market went here, and clearly it shows you that I'm going down. So even if we are waiting out on the market, you will have seen that right here is still going down. This big candle right here. And then this one confirms that it's still going down. So what will you do here? So if you're one of those persons that you're waiting to see, you miss this opportunity of buying in the market. Now you're watching the market and you start seeing this action right here. What happened then? What happened then? There it is. And this did happen between, look, 17th of August, 18th of August, 19th of August, 20th of August. So you've been watching this for a few days. And this all is our activity that is happening over the first 3 to 4 days. Okay, and you realize now you want to go into the market and say, okay, you know what? I love this entry right here. I can enter right here. So I'm going to put entry right here. I'm going to enter the market right here. And I'm going to put my stop loss up here. So now what we're going to be looking at is how do you do a sell trade? So your stop loss always is going to be above.
For selling, yeah.
Right? Very useful information. Take notes, guys. Okay? Tomorrow is graduation. So here, you know, now you put your stop loss here. Somewhere up here. But I'm going to just label it just for the sake of it, label it, because I want you guys to be able to watch the video over if you need to. So your stop loss will be somewhere there. So we can also look at it, risk to reward ratio. 65
pips.
Somewhere there. And if I look between here, how far it's going to go down, we're looking at about 127. 132, somewhere there, right? So if that wasn't an entry, look at that. So your entry going to be right here. Your stop loss going to be here. So risk to reward ratio. So even if I was measuring the first candle, and I don't want persons to put their stop loss right here. Some persons do this. And that's why they get stamped out of the trade. Here, they put the stop loss right on top of the wick right here. Do not do this. Do not do this, okay? Actually, allow yourself, give it space. Give it breather.
Because it can expand.
Because it can expand, but it's called a rally back.
Yeah.
Right? So right here, you'll see, look, it goes here. This is a higher time frame, but this is all the way out here. You'd have made the money here. But this candle right here, it goes back almost up to par.
Exactly.
But what I'm saying is do not do that. Okay? Give the candle, give the trade space to breathe. You don't want to be a spike in the market and you're stamped out of the trade. You don't want that. Okay? So what we're going to look at is here. You can put it about here. Or 3. You can put it somewhere up here. And that's good. That's good. I'm comfortable with this right here. Right? So that's your stop loss. Okay? Now, your take profit, you know that this is going to be your entry. So we're going to look at a trade now from this angle. We're looking for a sell trade. So right here, we're doing a sell trade. Sell trade. Boom. Right here. Okay, I'm going down. And what we're looking for is that this is known as what? Going down is known as what?
Bearish trend.
A bearish trend. Congratulations. Why my team bad man?
Yes, sir.
King, man. You guys are proud enough. So yes, so that right there is sell trend. So what we're gonna do right now? So we know that this right here is a sell trend. And we know that right here is where we're gonna take entry because it's gonna go down. So I'm gonna highlight this right here for you guys. After today, you must be able to look into the market, and we're gonna enter right here. This is where we're gonna enter right here. All this area right here. We're gonna be entering right here. So right here is gonna be entry. Right here. Put it on right here. And I'm gonna put in the word entry. So you can enter it right here, entry. That's how you're gonna entry. So what we're figuring out how we do our entry. So we're enter up here, this line right here, the same line. I'll put it, you know what? Put it on the line. Put it on the line. Entry right here. We're going for a sell trend and it's going down. So we know this is our entry point right here. Now figure out our take profit. So our first take profit can be here. I will always color code, guys. So I got less than 10 minutes on the lesson right now. Put that here, green. So that's gonna be your take profit number one, right here. That's entry right here. Pink line, entry right here. So our take profit is gonna be right here, this green. Let me zoom in some more. Here it is. This is a sell trade. Clear, guys?
Clear.
So this is gonna be take profit number one. And take profit number one can be as close as possible. It depends on how much you want to watch the market. It can be here, one. You can drop two here, three. If I make $200 or $100 in the market, I'm gone. If I make $50, $20, I'm still gone. How long you want to stay in the market? You can set your take profit as much as you want. So all these right here is your take profit. So what I'm saying? Go all the way down here. You see what I'm saying? I hope you guys understand what I'm saying.
Yes, sir.
All these are take profit area. So all this right here is known as what? All this area right here is known as what?
Profit zone or your.
Good. Take profit zone.
Yeah, Kevin, I realize why you're always telling us about time, because it's really going at a fast rate.
I'm telling you guys. So right here, as you can see, I've been telling you guys about time, man.
Yeah, man.
You guys gonna make if you guys gonna make it in trading right now, guys, you guys have to figure out time, man. And that's what it's all about right now. Time.
You have to move fast, yeah. Time management.
Right? And I'm gonna move my moving average is 13, guys. So I'm gonna change my moving average color. So all this here.
Milo's level 100, but guess what, guys? We got so many codes in this video that you're gonna be able to buy some crazy
All that right here.
Super OP, trust me. It's worth it.
It's worth putting in the
It
code.
takes like 20 seconds, but it's worth it.
It's worth it, and we're gonna check out the game and have some fun. Let's go.
I wonder if you guys realize how quick 40 minutes run off a while ago, guys. I've been on a call with you guys about 40 minutes now. Heading on to 40 minutes.
Is it?
Yeah. Zoom calls about 40 minutes. The free versions. All right. So right here, all this right here. So all these areas can be your take profit.
Mhm.
And this is your zone right here.
Right.
Everything inside here for the sell trade. So wherever you want to put your take profit, you can. If you want to move it on some more, you can. When you want to take entry, take profit 1, 2, 3, 4, 5.
But
So I'm saying you can even move it up back right here.
Yeah, that's dope. Holy cow, love that.
And then look at
The background noise, guys. Come on, come on. Who's doing that?
That fly is amazing. I really want that.
Be a team player, guys. Be a team player. No noise. All right, we got 60 guys here. So watch this right now. Let me see. A simple instruction. Who can follow the instruction? The noise in the background with the television, just mute it. That's why you guys have difficulty sometimes even learning. Just pay attention. Mute the thing in the background. Very simple instruction. Same thing in class. You're there chewing gum, take the chewing gum out. Same thing. So here, all this is going to be a take profit. Crucial. So you understand, guys? All of that, take profit. And wherever you want to put the take profit is up to you. Right here, here, down here, here. You can take one here because all this is happening right here, right in front of you. Take profit 2, take profit 3. And if it's the same candle right here that is happening, you could actually take profit on the same candle. You watch it in the market. Same candle. None of this existed yet. So it's the same candle. So if you wanted to do something like that, you could. I'm trying to show you guys something. Entry, take profit 1 would be this number right here. Take profit 2 would be this other number right here. There it is, guys, right in front of you. I know it's a bit tight.
yeah.
If you want to protect your money, I'm telling you guys, if you want to protect your money, it's not a get rich scheme. But if you want to, you know,
Yeah.
make little bits, you don't have to be making $200 or $50 in one trade. You can make $5, you can make a $10. It doesn't matter. It matters that you keep on winning trade consistently and identify entries. You can do the same thing here. Suppose we're going to go over here. Same thing. All this right here is take profit. So if you were supposed to move entry over here, for example, guys, you want to go here, and this was a good entry, you could put take profit right here when you hit it. The stop loss remain the same. That's your entry, your take profit here. And you can measure it from here to here. See that? How much is this? From the top of the candle, pull it down. 85 pips. That's what I'm saying. It's a lot of money that right there. And it go all the way here, all the way from here to here. It went all the way down to here. That's 175. That's what I'm talking about. So all this here could be, you're still going in for a sell trade. So all this right here is your take profit. All this is your take profit. These are your take profit zones. All this right here. Same thing. Trying to show you guys something right here. Entry. Right there. Enter the trade this way, right here. Good. Here it is. Entry. Right here. And it's right here. And that's the entry. Right at the top of the candle right here. Bring it down. Right there. So all these guys right now, same thing in the market. So I hope you guys learned today. This video will be uploaded. Thank you guys for listening. Your stop loss, your entry, your take profits. And this is known as a sell trade. All right. All right, guys. Have a wonderful day.
Same to
Thank
you.
you so much. Bye-bye.